Housing market earnings release alert. What DR Horton's earnings release has revealed. Hello, everybody. My name is John Howard, and in this short video today, we're going to talk about that very subject, which is DR Horton earnings release. Here we are. We're going from summer 2025 into fall of 2025. And not only has Warren Buffett and Berkshire Hathaway recently announced that they've invested $1 billion into the home builders of Lennar and DR Horton, DR Horton has also released their most recent earnings release. Says a lot. Just to be official, it's about $200 million that Berkshire Hathaway and Warren Buffett invested into DR Horton, and there's a lot going on with the home builders these days. Most significantly, the home builders now have basically something they never had before, which is a bulk buyer of entire neighborhoods from Wall Street, the institutional landlord. So here we go. Let's get into it. America's largest home builder dropped some bombshells, sending shockwaves through Wall Street, right? It's a warning that we should pay attention to. Here are the numbers from the earnings released. New home orders plunged 38% in key markets. Cancellation rates hit 27%, meaning 1 in 4 buyers, if not more, are walking away. DR Horton's stock has dropped 40% from the October 2024 high to a June low, wiping out $24 billion of their market value. I realize that June is, now a few months ago, but at the same time, it is what it is. From, October 2024 down to June of 25, they've actually lost $24 billion in, market cap for DR Horton. For the first time in DR Horton's 44-year history, they're offering massive incentives across all price points, from starter homes to luxury properties. This is 3% mortgage rate buydowns costing $40,000 plus per home, coming out of their profits. Some original breakdown details. Texas, right? Dallas listings up 112%, but prices are down 5.2% in 90 days. Florida. Tampa inventory is up 78%, with builders offering 4.99% rate locks. Arizona, identical homes selling for $126,000 less than January 2025 prices. Unlike the subprime crisis, we're facing an affordability crisis combined with inventory overload. Monthly housing payments have increased 142%, while incomes rose only 4%. The spread of this inventory buildup hasn't been seen before. What took 2 years in 2008 happened in just 9 months. Buyers are now waiting for prices to drop further, causing accelerating price declines. Even institutional investors who were aggressive buyers months ago have halted their buying. What the difference is this time is that the Fed has limited options to intervene due to inflation concerns, and we're seeing a controlled crash rather than a sudden crash. Builders consistently lowering prices until they find buyers. The housing market is experiencing a, let's say, reshaping, right? Not just another cycle. Buyers who understand these signals can position themselves accordingly and can thrive. Remember, Home Depot stock has returned 1.2 million% since their IPO in 1981. What that means really is a $1,000 investment, or $1,000 invested, became $12 million today. So people will always be building. How about you? What are you seeing in your local market? Are builders in your area offering extraordinary incentives? Comment below. As I said, everybody, my name is John Howard. I've been doing content, most of the content lately on real estate. The reason for that is because I've actually done short and medium-term furnished rentals for literally the last 2 decades. And during that time, I've actually owned or operated 5 different short and medium-term furnished rentals. And also during that time, I have owned I have launched and operated 4 different businesses that all went up to 7 figures per year or more. And I say that because, well, that's part of my experience, but also it's because you can actually, if you're a high income earner or you're like just a dynamic entrepreneur or some sort of a dynamic executive, you can completely, build wealth for your family and for yourself, with real estate investment property. In fact, you're actually the most likely person to get approved for a mortgage if you are a high income earner, because you're a high income earner, right? It's pretty obvious. So anyway, fast forward to now, here we are. I didn't really have an exit with the different businesses that I launched and operated, but I have held onto my properties. Fast forward to now, I basically have 3 here in Southern California, and they generate on average about 10 to 37,500 per month in booking revenue, and with multiple months in a given year that are 20,000 or more. So it's certainly a very nice thing. And at the end of the day, everybody has to kind of have a house that's paid off to retire. I mean, I shouldn't say have to, but it'd be nice if they had a house that they could retire in, which is paid off, or at least, mostly paid off, right? So it is a very nice path to, carve for yourself for retirement. And then also, if you have multiple properties as you retire, you kind of are giving yourself a nice income stream for retirement. But as you can see, we've got the nation's biggest builder here, largest builder, and they are, offering pretty crazy incentives. And the reality is that last time we saw some sort of incentives like this, it was a while ago, right? During the Great Recession, 2008 to 2012. And, had you actually purchased property back then, whether that's to live in or to do investment property, you would have actually obviously, benefited tremendously by actually holding on to that property. In my case, I've had these properties a long time. I've got 2.875% 30-year fixed mortgages. Very grateful that I was able to, get those rates, during the pandemic, and actually, certainly very grateful that I held on to them up until the pandemic and have continued to hold on to them now. So anyway, I've kind of been, talking about real estate because, even Alex Hormozy says, recently, he says a lot, right? But, one of his posts on X was, real estate is the sure thing, business is the big thing, which sounds great. And I certainly agree. But at the end of the day, why not just have the sure thing? Why not go for the sure thing, or why not have the sure thing alongside of other things? In fact, if you actually, look at the actual returns, I've also done some videos and content related to the Case-Shiller Index, the National Home Price Index, which goes 1995 to 2025. And that's actually 309%. And then you compare, let's say, I have another piece of content I did video and then also post on Warren Buffett. And with respect to Warren Buffett, he basically doubles the S&P every year, right? So if the S&P 500 does 1,008%, and you say, well, wait a minute, that's actually higher than the national home price average of 309%. No, that's an incorrect statement, because the national home appreciation doesn't factor in leverage, right? So if you just do the simple math and you factor in 10% down payment, that's actually a 3,090% return, which is really 31x. And that's just appreciation. That doesn't include rental income and cash flow. And that doesn't include, the tax benefits, and then the other benefits of, well, it doesn't really, amortization doesn't matter because you're going to pay the property off over 30 years. But, you do have the ability to borrow against the property if you choose to, right? But basically, the fact is that, if you bought, let's say in this day and age, a $500,000 property, you put 10% down, that $500,000 property, in 30 years is going to be worth, $1.599 million. So that's actually, again, a 31x return on just appreciation. And even if you take a look at the S&P 500, which over those 30 years did 1,008%, that's 11x. That's still the appreciation, and again, that's just appreciation, outperformed the S&P 500 by 20x. And with Warren Buffett, if Warren Buffett doubles the S&P 500, that's 1,008 times 2. That's actually 2016. So Warren Buffett is doing about 21x, during those 30 years. You're still beating Warren Buffett and that's not easy to do, as everybody knows. You're still beating Warren Buffett by 10x, and that doesn't even include rental income and cash flow. So with rental income and cash flow, if you actually do the math, you can make a lot more money. The standard rule of thumb is about 2 to 3x of long-term unfurnished rents with short and medium-term rentals. Again, that's 2 to 3x. And even for me, like if I were to actually calculate what the actual cash flow is, well, let's just say the rental income is a little easier. That's going to be millions of dollars just from actually 3 properties, over 30 years. Now, if you do long-term unfurnished rents from 1 property, that's going to be not even $1 million, right? But still not insignificant. I mean, who doesn't want an extra, 400 to 500,000 in cash flow, over 30 years? But at the end of the day, with short and medium-term furnished rentals, we now are in a place in the world where we can actually do things like Airbnb, and Airbnb is only 43% market share now, but there's many other sites. But you could do really short and medium-term furnished rentals and make way more cash flow, and then also get that appreciation, because there's not that many investments out there where you can actually get 5 benefits, or actually 6 benefits from one investment. As I said, that's appreciation, that is rental income and cash flow, tax benefits through depreciation and active income offset. You have to qualify for active income offset through material participation. And then the 4th is amortization, paying that loan down over time. You got to get a good loan. And then the 5th is the ability to borrow against the property if you choose to. And then the 6th benefit is then, getting a property to actually, set it up so that you pay it off, so that you have a property to retire in that's paid off, or at least mostly paid off when you, choose to retire. So everybody, if you like this content, you can consider giving the video a like. You could also consider subscribing to the channel. If you want to get involved in real estate, you can go ahead and look at the links in the description area, and you'll see a link that I launched something called the SMTR Launch Kit. You can go check that out. You could also, email me if you want. I've got my email address in the description area. I also do, it's very basic, very inexpensive and simple, thing you can check out. I also have very basic and inexpensive email coaching if, you're kind of ready to go and want to do a property. Other than that, if you have any questions, please feel free to put them in the comments area. And if you know anyone that, might want to benefit from somebody that's maybe a little bit more of an expert than them, like myself, and then has experience, and they want to get into real estate, and maybe it's not yourself, you can consider forwarding them this video. Thank you very much, and have a great one.